God, you know what? Hang on a second. Hang on a second. Let me just get situated. Yeah. That's better. See, that makes my eyes look a bit more normal rather than right. So, lesson today is going to be how to identify a shift of structure and how we can use it to increase the probabilities of the market moving in our direction when we enter. So, let me load up the markets. Right. So we've got, is it sharing? Yeah. So we can see these are my markets selected for the week. It's currently 28th of September. Euro USD, GDP USD, NZD USD, USD CHF. So I want to go and grab believe you're right. So what I'm going to do is I'm going to use this trade example. I believe. Am I going to use this? Okay, maybe I'm not going to use this. We're going to wing it anyways. We're going to pick a pair. Not got any actual select pairs or any plan for this. I just know how to trade. It's just simple as that. There's not much more to it. I'm going to look for a clean market now. Okay, right. So come over here. Euro NZD is going to be our example for this shift of structure. But what's going on? I'm still streaming. Yeah. Okay, that didn't want to participate. It's cool. It's cool. This is an even better example, right? So, fuck the other pair, whatever it was. For this, I'm even going to delete my markings just to make this even clearer. So, diving in, right? A shift of structure. Question 1, what is a shift of structure? A shift of structure. A shift of structure is going to be a point in time when a market creates, in a bearish example, has created a lower low. Now, when price pulls back to make the potential lower high to continue pushing down, a shift of structure is when the market doesn't create a lower high, but continues to push back up and close above the previous lower high that the market just created. So this would equal a shift of structure. And it's the same for an uptrend. The market's pushing. Don't you start barking. The market's pushing to the upside. You can hear these dogs. The market's pushing to the upside. We create a higher high, a higher low, confirm that higher high. Now, when the market's supposed to create a higher low, we see, boom, the market closing and pushing below the higher low, creating that shift of structure. So I'm going to make it a little bit clearer with the two-step example. Lower high, lower low, lower high, lower low, shift of structure. The market closing above the lower high and below the lower low is the shift of structure. This laptop is going to die before the end of the lesson and we have no clothes. This is not ideal. It's not ideal. Right, change of venue for the lesson. Slight intermission. We will be back shortly. Right, ain't no way I put wires in the knob plug. No. Right, not in my usual spot, because I'm house sitting. For the beasts. Right, this works out. You know, we can make this work. Right, back to it. What is a shift of structure? It's a change. It's an indication that there's a change in the trend. So when it happens in a downtrend and we see a shift of structure, which is this, that's an indication that the market is going to start creating higher highs and lower lows. And when it happens in a bullish trend, it's an indication that the market is going to start creating lower lows and lower highs. Now is the juicy bit, because understanding the turning points in the market is where we can really capitalize. It's how I capitalize on market movements. So, diving into this beautiful, beautiful piece of price action here, you can see, I'm simply going to draw this out. The market structure we have here is lower low, lower high. Now this is the exact same structure we just created. Lower low, close above, creating a higher high, because the candle closed above the lower highs candle, confirming the shift of structure. And this is where I will use it to my advantage. Understanding this, what I now know is that the market has indicated to me that we're going to start pushing to the upside and that this bearish trend is at a low. It's no more now. We've hit a low. Now the market's reversing and we're starting to trade to the upside. And what do we know about a bullish trend? For a higher high created, there must be then a higher low, then a new higher high, then a higher low. So what I do is I wait for the market to create that shift of structure, and then I simply wait for the pullback to the higher low, and that's where I enter my trade. So as you can see here, we create this higher high, and then we simply just wait for the higher low to be made. We take our buy position here, and then we ride the position into the higher high. So my entry will be around here, my stop loss below, and my take profits up here. Exactly like this. So now you understand, right? The basic concept of a shift of structure. And if you can grasp the trend and the shift of structure and the higher low, now is, I'm going to show you now how you really capitalize on this. This is technical shit. We use multiple time frames. As you can see in the corner, we've got the monthly, the weekly, the daily, and the 4 hour, the 2 hour, the 1 hour, the 30 minute, the 15 minute, the 5 minute. And this is where I get real techie with this shit, because we can clearly see, right? I'm going to highlight this in specific. So this is on a weekly time frame. The weekly time frame has just shifted structure and has now started to create the pullback. So if we go down to the daily, what can we see on this pullback? Okay. This is the pullback. You see, this pullback, 5th of May, it started pulling back. The 5th of May, the market started pulling back, right? If you see, you see, right? If you see, you see. Little sidetrack, but it's the same market structure on the daily. If you cannot see, lower low, shift of structure, higher low. We come out to the weekly, lower low, shift of structure, exact same structure. So now we understand, right, how we have shifted structure over here. And now we're starting to pull back. We see price come here. Now when we go down to the daily, we understand that the weekly is creating a higher low to create a weekly higher high. And I happen to see, okay, the daily is currently creating a motherfucking higher low. Now, the current stage the daily is at is this. Daily is at a higher low, which means we should push up. Nia, there's enough of that. Right? The daily's at a higher low, which means the daily should push up now from here to create a higher high. The weekly's at a higher low, and it should now push up to create a higher high. This is how you truly capitalize. If you can identify these higher lows, you find your entry, you find your stop loss, and you continue to trade. It's genuinely as simple as that. Now, obviously, there's a lot more price action that we're looking for. So when we're looking for an entry, we're looking for an engulf candle. Now, the daily here, it has rejections. Now we come down to the 4 hour. On the 4 hour, what are we going to look for? We're creating a daily higher low. What do we want to see? A 4 hour higher low at the daily higher low, at the weekly higher low. So, this could not get any sexier than a motherfucker. I even took this trade. I just happened to get stopped out, right? It was fucking beautiful. We have, if you know, you know, we have a beautiful channel consolidation coming here. A breakout. And again, what do we have? A higher low. The reason I lost on this trade is because this was in May. This was many, many moons ago when I was still a young weed trader, full of greed and FOMO. And I entered too soon. But we have this breakout. Now, when we look at structure, this is why you need to pay attention to detail in trading. I'm going to zoom in on this motherfucker. We're going to follow structure. Lower low. Okay. This is where I really want you to pay attention. Because you could ask the question, did price shift structure here for me to buy at this higher low? So when we go to the drawing, the market did not shift structure. We were still technically bearish, which means this isn't a higher low. This isn't a higher low. That's on the way to create a lower low because the market here closed below. It did not close above. Now, when we do have a higher low is when the market creates that shift and then we start to pull back. Now this is our high or low that we would want to enter at, and we want to take the trade with our stop loss below, with our take profit in the same place, and you see how we enter and the market goes away. But the key is to enter at a weekly higher low, a daily higher low, and a 4-hour higher low. And it's the same for a sell. You want to enter at a weekly lower high, a daily lower high, and a 4-hour lower high. And we understand that when we see these shifts of structure, I'm going to write this down because this is beautiful, right? A weekly lower, we're going to go for a high low, keep it what we've been doing. A weekly higher low, right? Daily shift of structure. A daily higher low, a 4-hour shift of structure. A 4-hour higher low, now I'm going to blow your mind. A 4-hour higher low, a 30-minute. Actually, I'm going to rephrase. A 1 hour down to the 30-minute. Wrong. Sorry. I'm sorry. I keep fucking up. A 2-hour down to the 30-minute. Higher low. Sorry. Shift of structure. That is the recipe. I forget the recipe sometimes. I know it deep down. I get carried away, you know. But I'm going to show you. So we've had the weekly higher low with a daily shift of structure. Okay. When did the daily shift structure, you may ask? Well, the daily shifted structure down here, confirming that we are pushing to the upside. So we've had the daily shift of structure. Now the weekly is already bullish. Now when the daily creates that higher low, now we just need to see the 4-hour shift of structure because the 4-hour is bearish. So we need the time frames all trending in the same direction and all at the same stage in structure, which is the higher low and the lower high. So when we come down, okay, now where's my entry though? Where's my entry? This is going to blow your mind. The 1 hour time frame. Oh, bloody hell. Let's have a look at this, shall we? On the 1 hour, what has happened? On the 30-minute, what has happened? The 30-minute time frame, right? What do we see structural wise? I can see it. Lower low, lower high. Lower low, lower high. Lower low, higher high. Boom. This is your entry confirmation that this is your entry point, right? With your stop loss below this, because now we have those higher time frames. We have such strong confluences from those that when this 30-minute tiny little time frame shifts at those moments, we can now anticipate for this market to do one of two things: create a higher low, which will not close above here, which will not close below here to create the push to the upside, or it will just create the push to the upside. Now you can choose, do you want to enter straight away or do you want to wait? Ooh, shit, that's a bit awful. Or do you want to wait for the higher low? So in this case, if you would have waited for the higher low, you would have missed it. Or if you would have entered straight away, you would have caught it. Again, there's no such thing as a perfect strategy, you know? And you see this trade was very, very profitable. Very, very profitable. You know, if we play this out, very, very profitable. My goodness. Look at that. Look at that. Look at that. Let's clean some of this shit up, shall we? Look at that. Get rid of these things. Get rid of that. Get rid of that. From that dissection all the way down to that entry, the market was riding. Yeah? We'll see how high it went before it started. Oh, there. Oh, now we're starting to shift. So we reached highs of, structural wise, a 1 to 7. Madness. But that's because we traded with the trend. That's genuinely it. That is the power of trading with the trend. You see how we caught the trade here? I'm just going to put this on the daily. We caught the trade here, and we caught it all the way up to here. Well, you could have caught it all the way up to here. I didn't. I was still stupid. But you got to be stupid to get smart. But that's all just understanding the trend and the shift of structure and where the market is in its development. Is it creating a higher high? Is it creating a higher low? Is it pushing away from the higher low on the way to a higher high? Where is it? What's its direction? Because once you understand that, you can really start to capitalize on your top-down analysis. And this can continue. You can dissect the 30-minute shift of, right? This rule genuinely applies again. A 30-minute higher low, right? This is why I have it with a 5-minute shift of structure. That's how low you can take it. And if you really wanted to, which I don't advise, because now you're just getting really fucking greedy, but a 5-minute higher low with a 1-minute shift of structure. The same principle applies. If you can grasp the higher low method, the shift of structure, boom, 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 you'll catch big trades. It's going to take you some time, but you'll catch them. And that is the key, my friend. That is the key. Lovely jubbly. That concludes this lesson. 20 minutes. Educational. Maybe not.